Hey everybody, welcome back to the Financial Freedom Show. My name is Rob Berger. This is a live stream so that you can basically see me make all kinds of mistakes, which I usually do when I create a pre-recorded video. But today, I just felt compelled to talk about AMC. I'm a huge movie fan. That's what I used to do as a kid. This was before the internet. And that's what we did. We went to movies. I love AMC, but its stock is kind of absurd right now. And I kind of want to talk about that and why it's so crazy and what, as investors, how should we interpret this? Should we invest in AMC? Should we, maybe risk some of our capital and try to make a few bucks really quickly? And so that's what we're going to talk about today. I'm actually, unlike a lot of, if you look at YouTube, and I'll just pull this up on the screen, I was looking at some of the uh, live videos. Here was an interview of Adam Aron, who's the CEO of AMC. Here's look at a live stream right now. AMC and GME squeeze live. And then, of course, you got to throw in Dogecoin. I mean, why not? And this is sort of what's been going on. And I want to try to make some sense of it because a lot of this actually does make sense, but not in a way that I think most investors would think. So let's get right to it. Let me first show you what's been going on with AMC stock. This is a chart of its performance. We can actually go back quite a long way. This is in a tool that I use called Stock Rover. And we're looking at AMC, and this actually goes all the way back to 2013. And we can see, I guess in normal times, we'll call it, it got up into the mid 20s. But then more recently, it tanked almost to zero. And in fact, we can get a better picture of this if we look at year to date. Beginning of the year was at like a couple of bucks. There it is at 212. We had a little bit of this was sort of, if you think back, boy, this seems like ages ago, just a few months ago. This was sort of the GameStop craze and Dogecoin craze. And AMC jumped to almost 20 bucks a share, and then it kind of fell back down. And then here in the last few days, maybe even last week or two, you can see it skyrocketed. I think at a close, it went up to like 62 bucks. I want to say intraday, maybe it passed 70, I think. And it's since come down in the last day. It's now at 53. The market's still not open yet on June 4th. It's 8:30 in the morning Eastern time. And we'll see what's going to happen. But a lot happened in the last 24 hours with AMC stock, and I want to walk you through it. Now, normally, you think about what companies have to disclose to investors. Of course, it's highly regulated by federal law and the SEC. And one of the things they have to do is, they have to file an annual report, and they have to file a form. It's called a 10K. It includes their financial statements. They have to be audited by a public auditor. But what the regulation says, some things happen during the year that are so important that companies, you can't wait until your 10K to disclose it. You have to disclose it earlier. And one of those things is a quarterly. They have to file a 10Q. So it includes unaudited financials for the quarter. We're going to actually look at AMC's most recent 10Q in just a minute. And so they have to file those. They're unaudited, but their auditors still have to review the 10Q and the financials, and there are certain procedures they follow. But then what the regulator says, quarterly, that's good. But there are some things that are just so important, you can't even wait for the 10Q. You got to tell us immediately. And they call it a current report, and it's an 8K. That's the number and letter. They give Form 8K. And that's what they have to do. And in fact, AMC filed an 8K yesterday. I'm going to show it to you. Here we go. Here it is. Let's just make sure we're looking at the right thing. Yep, there it is. Form 8K, current report, June 3rd. There it is. AMC Entertainment. What did they do? They said, and it's really the first paragraph that's important. What they said was, we've entered into an agreement. And you see here, entry into a material definitive agreement. If a company enters into an agreement to material to its financial statements taken as a whole, they got to disclose it to shareholders, to the public. Here it is. What's the agreement? Well, they entered into an agreement with Riley Securities, you see right here, and Citigroup to do what? To sell up to 11,550,000 shares of their stock. That's what they're going to do. When? From time to time. That's what they say. We don't want to really disclose when. Maybe we're not even sure when. From time to time, this is what we're going to do. Well, it turns out that what they really meant from time to time was in the next 3 hours. Because what AMC did yesterday was dump all 11 million shares onto the market. And they raised, as you can see, $587 million. If you dig into this article from CNBC, I think, yeah, here we go. Apparently, the time was now. Here's what they said. When AMC announced this offering, it said in a filing, it may sell some of its 11 million shares, quote unquote, from time to time. Apparently, that time was now as it completed the offering in about 3 hours. Now, normally, when a company does this, existing shareholders are not very happy because it dilutes their share of the ownership of the business. But it's kind of like the government printing US dollars. Eventually, it's got to, you think, decrease the value of the dollar. That really hasn't happened as much as we might think it should, but eventually it will. Well, shares of a company are no different. You start selling a bunch of shares and you dilute the value of existing shareholders. Now, in the case of AMC, though, at least from a corporate perspective, it probably made sense because stock right now is at over $50 a share, which is what they netted from their sales. A number that, as you'll see in a minute, I think we can all agree far exceeds any possible reasonable valuation of AMC theaters. And so when they can sell 11 million shares, raise a $500 million, right? 587 million bucks, particularly for a company whose balance sheet is a complete disaster. Absolutely. I mean, it makes all kinds of sense. But if you're an existing shareholder, the fact of the matter is you now own a smaller percentage of the company. We'll look at some of the details. And that raises the question, well, all right, it's trading at like 50, 53 bucks a share. We'll see what it does at the open. Does that make any sense? And when you evaluate a company's stock, you kind of there are two camps. There's technical analysis and there's fundamental analysis. Technical analysis says, I don't really care about its profit. I don't care about its revenue. I don't care about a company's balance sheet. All I care about is what the stock price is doing. And what I'm going to do is I'm going to look what it's done in the past, the last day, the last week, the last month, whatever. And I'm going to do some technical analysis to predict what I think the stock is going to do today, tomorrow, the next week, the next month. I don't really care about its balance sheet. What I've found is that it's extremely difficult to build wealth consistently over time through technical analysis. It turns out that we can have all kinds of fancy tools and charts, and we're still not very good at predicting stock prices. And so I'm a fundamental investor. I look at the fundamentals of a company. And does it no different than if I were going to buy a company down the street? I take the same approach to investing in Apple or Berkshire Hathaway, or in this case, AMC. So let's take a quick look. I know this isn't popular right now. People just want to get on Reddit and Wall Street bets and just throw some money at it. Why not? We've got a lot of stimulus money floating around. Let's just throw a few bucks at AMC on Robinhood and see what happens. But I'm going to take a breath here, take a pause. We're going to actually look at the fundamentals of this company. It's not pretty. All right. We can first go to Morningstar. This is AMC Holdings, and I'm looking at the financials tab. And we can go back, we can just see it a bird's eye right here. 2018, the blue is the revenue, the red, you really can't see it, but it's their net income. And the reason it's hard to see is because they didn't have any to speak of. And remember, 2018 is pre-COVID, right? Same thing with 2019. And then, of course, COVID hit and it was a disaster, but that's certainly understandable. We can actually see the numbers here on over, about $5.5 billion in revenue. They made about 100 million net income. That was 2018. 2019, they lost about 150 million, and then a big loss in 2020. Trailing 12 months, still a big loss, and of course, revenue is way, way down. Again, that's understandable, but whether it's AMC's fault or not, the fact of the matter is their business is in serious, serious jeopardy. And if we jump over to the latest 10Q, so let's go back, make sure we're looking at the right thing. Here it is, it's 10Q. It's for the period ending March 31. It's for AMC Holdings. Let's take a look at their financials. And let's start with the revenue. Now, again, this is obviously affected by COVID, but we can see that for the period ending a year ago, 568 million. This is in millions. And obviously now down significantly. total revenues, because it's not, this is just admissions. They obviously have food and beverage, because who doesn't want a bucket of corn and a giant soda when you go to the movies? And you can see their overall revenue was from just under a billion down to 148 million. We can skip all the costs. Costs come down, of course, um, but their losses are pretty significant. Here's their net loss last year, just horrific, but they're still hemorrhaging money. Here's their net loss, and that's before income taxes, so they had a slight benefit there. But this, you know, good, bad, or otherwise, was a disaster that's continuing to unfold. And so we've got a company that really is fighting for its survival. And it raises the question then, why in the world is the stock price going up? Well, part of it is just the Wall Street bets, right? The meme stock, the sort of retail investor who, through the power of social media, a bunch of folks rally behind a company. They've picked it was GameStop before. At one point, they were rallying behind Dogecoin. Now it just happens to be AMC. And this is Wall Street Bets. This is their discussion thread for today. And I was reading through it. It's interesting. You see this right here. Trey thinks long-term value of AMC is 20 to 25 bucks. Is he lowballing or optimistic? And you might be thinking, well, Trey? Who's Trey? Well, I think they're referring to Trey's Trade. There's Trey's Trade. This is his YouTube channel. Obviously got 288,000 subscribers. He was actually on CNBC today. He interviewed yesterday Adam Aron, the CEO of AMC, who has been very vocal in his outreach to the sort of Wall Street Bets retail investors. Of course, they've sent his stock to the moon, and the company then took advantage of that and selling shares yesterday. So of course he loves them. I would too. And so he's reached out to them. He did this interview with this YouTube channel yesterday, and that's kind of where things stand. And it raises the question then, well, what's going to happen in the future? And what do people think about this sale of stock? Well, Reuters had a good article on this very issue. As I mentioned, it dilutes the shares. And you can see here, the company was able to sell at 50 bucks, $50.85 per share. Remember, it was trading at $2 a share just 5+ months ago. And the dilution is, of course, significant. And you can see, let me find it here. Give me a second. Here we go. AMC's business was trending in the wrong direction even prior to the COVID-19 pandemic. We think AMC's stock is worth 0 per share, given its weak earnings, dilution from recent stock sales, and mountain of debt. Now, that's one person's view. His name is David Traynor. He's the CEO of an investment research firm. Now, $0 per share, that may seem kind of harsh, right? Even if you don't agree with 50 bucks a share. But let's go actually back to their 10Q. We were looking at their income statement, which is what this is. Consolidated statement of operations is a fancy way of saying income statement. But we can also come down here to their balance sheet. And we can see we've got their assets and we've got their liabilities. Now look at this. Here's their total assets, 10.4 billion. These are in millions, so 10.4 billion. But look at their total liabilities. You don't normally you don't want your liabilities to exceed your assets. That's true if you're a publicly traded company. It's also true just, for you and me. Now, I started out with a negative net worth after law school, so I get it. Sometimes that's where you start. But, for a publicly traded company, not a good thing. And so its book value is actually underwater. Their assets do not exceed their liabilities. And that's true even after factoring in the 587 million that they raised yesterday. So the idea that AMC is effectively worthless is actually not unfounded. If we look at the balance sheet, that's kind of where it stands right now. And that then raises the question, then why is the stock going through the roof. And I think the big part of it is kind of where we are in an investment cycle. The government's been printing money. The government's been passing it out in the form of stimulus. In fact, I just read an article recently. In the last American Rescue Plan, our government sent $350 billion to state and local government. Now, for those that follow that topic, you may recall last summer, there was all that negotiations over stimulus. And you remember you had, for the Democrats, Pelosi and Schumer. For the Republicans, you had primarily Treasury Secretary Mnuchin, and they were going back and forth trying to negotiate a deal, and they couldn't. And one of the big sticking points was that the Democrats wanted to give $1 trillion to state and local governments. The Republicans and said, no, 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 you're just trying to bail them out, not because of COVID, but because of past problems with the way states were running their fiscal house. And so they couldn't reach an agreement. And what happened over time was we found that, the state and local governments actually didn't need any help. It turned out, I was as surprised as anyone, that their tax revenues actually were just fine. It didn't look like they were going to be fine, but they turned out to be fine. But it didn't stop the federal government more recently from sending $350 billion to state and local governments. And of course, they sent out more stimulus. They extended unemployment. And all of this money eventually makes its way to consumers, sometimes directly, like in the form of stimulus, sometimes indirectly through $350 billion to state and local governments, which then get funneled down to folks like, well, you and me. And that is fueling, along with very low interest rates, a rise in asset prices, along with whether it's Dogecoin, Bitcoin, AMC. People have cash. And they're using it to some degree to bid up prices on assets like AMC. Now, there's more to the story. A lot of professional investors have shorted the stock. They've said, look, AMC is overvalued, its price is going to come down, so we're going to short the stock. And the retail investors, the Redditors, they see this and they say, we're going to do a short squeeze. We're going to all rally behind the stock, send the prices sky high. Eventually, the shorts are going to have to cover, and they're going to do that by what? By buying shares to cover their shorts, which will send the prices even higher. It's exactly what happened back a few months ago with GameStop. And you recall, that's what caused Robinhood to actually stop trading on GameStop. And that was a whole brouhaha. That hasn't happened yet with AMC. We'll see. But what I can tell you is, if you're looking at AMC and wondering if you should too kind of throw some money at it, all I can tell you is this: it's a very, very dangerous, dangerous game to play. That's true whether you want to be long on AMC, although is anyone really long on AMC? In any event, whether you want to be long on AMC or for that matter, whether you want to short the stock, I think right now the volatility is so crazy, the stock is so unpredictable, it's completely divorced from the fundamentals. As we saw in the financial statements, the company has a negative net worth, it's hemorrhaging money. It's obviously not worth anything near what it's trading at now. But that doesn't mean it won't go up higher. If we step back from this as long-term investors who don't play these games, who don't jump in to try to make a quick score by betting on the direction of a company, whether it's AMC or some other, in the short term, I think this is a cautionary tale. I think we're going to look back on this time and we're going to see just how absurd it was. And it's going to affect everything. It's going to affect stocks like GameStop and AMC. It's absolutely going to affect the crypto market. We've already seen some of that now. I mean, Elon Musk sends out a tweet and it can send, $1 trillion crypto like Bitcoin into a tailspin. We're even going to see it, I think, with stocks generally, that even like an S&P 500 that's trading significantly above its historic norms, that may make sense given current interest rates. But as long-term investors, I think we need to be prepared for pretty significant volatility. And when inflation really starts to take hold and interest rates go up, and I'm not predicting when, I am predicting it will happen, but we never know when, I think we're going to be in for a rough road. And I think we need to prepare for that now, psychologically, and to some extent with our portfolios, particularly if our portfolio is significantly exposed to high valuation, high growth stocks. Now, If you're looking for a channel that's just going to pump AMC and show you a bunch of technical analysis, you've obviously come to the wrong place. And for those folks, you probably have already moved away from this video. That's not what this channel is about, because that's not uh, a sound way to build long-term wealth. It could be fun, and if you want to have some throwaway money to throw at a Dogecoin or an AMC or whatever, just to have fun, no different, honestly, than buying a lottery ticket or going to Las Vegas. Have at it and have fun, but it's not a good way to build long-term wealth. What we should do, though, is remember what's happening today and in this time period in the market, so that when things turn ugly, and they will, we can learn from it. We can remember what happened and learn from it as investors. I find the AMC drama fascinating. I love this tension between the retail investors, the Redditors, and the institutional investors that are shorting the stock. That's an interesting drama to watch, but I can tell you I'm staying completely out of it as an investor. I have no position in AMC, and I certainly would not be buying it long today. It simply makes no sense on any sort of fundamental analysis. Feel free to disagree with me. Please be kind. Leave comments below the video to tell me your thoughts on AMC. And if you're a big believer in it, that's fine. Love to hear your opinions. But let's all be honest with one another with what we're doing. We're not, if you're investing in AMC, you're not investing in it because you really think it's worth $50. I hope you at least acknowledge that. And apparently, Trey, I think Trey trades, but maybe it's some other Trey, thinks it's worth $20 to $25 a share. I think that's nonsense as well. It's simply, by any fundamental analysis, not worth anywhere near that price. And I love AMC. I hope it stays in business. I love going to the movies, although I haven't been to one in over a year. Anyway, well, there you go. That's my take on AMC, what's happening with the stock, what's happening with the market more generally, and my view of, yeah, you might want to stay away from AMC. Hey, until next time, remember, the best thing money can buy is financial freedom.